Yes, mate.
Fantastic, fantastic.
Very good, thanks.
Good, good, good. Now, just to really get on board with it, non-farm payrolls is coming out in 15 minutes. Yeah, I just want to go through, for example, just looking at it, why it's so important. 70% of the currency market is dollar based. That's why if anything happens to the dollar market, it has a bigger effect in the market, for example. So, for example, say when the terrorist attack happened in 9/11, it had a massive effect. When stuff happens out that's not necessarily directly affected to the dollar, it might not have as big as effect. Now, non-farm payrolls is basically the unemployment figure, the jobs rate is the figure. Yeah. Now it indicates, it gives you, it's a key bit of economical data that indicates whether the economy is doing good or not. Now, certain times, some non-farm payrolls are higher than others. For example, in the run up to the festive season, you get higher numbers because the retail employ more. Now, they don't take into account the reason why it's called non-farm payrolls is they don't take into account non-farming jobs or agricultural jobs. They believe that it's too seasonal and they don't incorporate it in with the figure. But I'll be transparent with you guys. Non-farm payrolls used to move the markets like 300 pips. When I was a junior trader starting out, you would get massive moves off NFP. Now, there's something that you guys need to be made aware of as well, especially as you're trading. Sometimes around the news events and around opens, execution can be a little bit sloppy in the sense that because there's big moves where if your orders are there, like once I lost a hell of a lot of money by having a few orders just above and below, and accidentally they got triggered, but they weren't in the right places. So be careful sometimes because the news can trigger it. Now, the main thing I want to go through with you guys as well is when the news comes out, like interpreting the figure is one part of it, understanding like different things. It's more about repetition. The more non-farm payrolls you see, the more confident you become with it. But there's going to be two options off the back of the figure. It's either going to be in line with the consensus and it's going to come in as a strong dollar or a weak dollar, or it's going to be obscured. When the figures are obscured, so say if this figure came in at 280 or 110, that's obscured. It would have a massive move on the screen. If it comes anywhere near to 200k, it's probably going to be in line. It will probably indicate from this as it stands with the previous being 300, it would indicate strong dollar. Now, what you need to understand is so many times it will indicate being a strong dollar and you will see a weak dollar on the screen. Yeah. Now, what we're going to do today while the figure comes live is I'm going to indicate to you and show you where the price, as soon as the figure comes out, the price will run into to levels to find orders. Now, what will happen is that will happen within 15 to 30 minutes of the figure coming out. Now, you guys will be reactive of the price, thinking, trying to interpret the figure. Yeah. Now, some of the best entries, especially some of the best entries where the trades have followed through, come from these type of entries where the news comes out, it pushes it into key levels, and it changes the order flow, and then the market moves against you. And a lot of retailers get end up on the wrong side. It's one of the main reasons why a lot of guys will see the figure come out at 130, expecting that it's going to be a weak dollar, and the dollar's strong. Yeah, so we're going to go through that. But just before we do that, just before the figure comes out, let me just get it prepped in regards to figure and number. So can you guys see it says 313 was the previous. Now that's quite a high jobs figure. Yeah, but don't forget, yeah, this is coming off the back of the retail festive April. Like we've come out of the festive season where there's high levels, so like we're not really expecting a higher figure. I think it will come somewhere in line. If it doesn't come in line, that's when you're going to see the bigger move. Now, as a trader, a lot of the times, especially recently, the economical data is not really doing anything to the markets like it did before because the markets are quite good. The sentiment's quite good overall at the moment. Trump came into power. He's done what he said on the tin, and realistically, he's kept his stuff at bay. The things that are developing with like Russia and stuff, I think the fact that he's backing off from it, it shows you the fact that he's trying to line himself up for that second term so he can do the second term. Now, if he does the second term, you're going to see a continuation. You're probably going to see the markets extend. You probably won't see a 25% uplift like you did from when he came into power, but I think that you'll still see a little bit of an uplift, maybe 10, 15% before we do eventually, in my opinion, probably get that correction or crash, which happens every 10 years. For example, Lehman Brothers .com bubble. And that's what I'm really waiting for because the market falls 3 times more than it rises. It's easy to make money in a falling market. It's putting it in a layman's term. The market has to give you the movement for you to make money. So if it falls 3 times as fast as it rises, what side would you rather be on? I'd rather be on the falling side, if that makes sense. And that's one of the advantages of it as well. So coming back to the figure, yeah, if this figure now indicates, if it comes in at 192, comparison to the figures in line, I would expect it to be a strong dollar. Yeah, but I don't want to say, because I don't predict or I don't guarantee what figures would be coming out, because that will put it in a situation where I've got a crystal ball. You can't do it like that, because that's how you lose money. Yeah. Now, what you guys need to be looking for in regards to look at this. There's another event straight after. Can you not see this? Canadian employment as well. Now, this is something to be.
There's also Powell speaking, yeah.
Yes, exactly. That's what I was just going to get onto.
Sorry.
Not a problem. Not a problem. Thank you for reminding me as well. So there's also on top of Powell speaking, there's a Carney speech as well. Yeah. Powell speaking in the evening. He's going to give sentiment. This type of event generally it's unexpected to move the market. It is of high importance. You will probably get some moves towards the back end if he says something unexpected, but he's generally quite dovish anyway. And I think actually after his issues with Trump, I need to go through that a little bit thoroughly as well, but it could go either way. But I don't think we're going to see massive moves off the back of it. I think the non-farm pay is going to be the main thing that everybody's working. Like today, market's flat. It's not really as choppy. You can see that's no breakout, if that makes sense. If you lot have been trading euro dollar, it's broken out from London Open, but like realistically, there's no follow through on the move. You know that there's news coming out. Yeah. Now, has anyone got any questions in regards to the figures? I don't mind how small, how big. I'm going to go through these events as well, but I just want to prep it because the figure's going to come out. Has anyone got anything in regards to non-farm payrolls, guys? Is everyone?
It's just I think people didn't react as strongly to the last non-farm payrolls despite the number because of the wages growth. So what you said about it being a lot of retail that could have made the numbers look quite low because of low relative pay for retail. So I think in line with that, it would be very interesting to see what the wage growth increase is along with
Correct. You should always keep an eye on the overall data. That's spot on there, Stephen. It gives you an indication in regards to whether that is going to move the market or not. Nobody, I don't think, can 100% tell. It's just something which you're going to have to watch. But when you go through periods of uncertainty, the figures move the market a little bit more. Right now, because there's quite a lot of certainty with Trump and stuff like that, the markets are quite good. They're quite buoyant. They're bullish, if that makes sense. So they're not really as effective. But if the figures start coming out a lot more unexpected, you'll start to see bigger moves. So really, you have to be independent to the figure that comes out. Is that clear? Yeah?
Yep.
Yeah, perfect. So it's going to be coming out as well. Now, what I want to do as well, I just want to bring the charts over, yeah? Now, what example say, euro dollar's the major one that's going to move off the back of it. All pairs will move off the back of it. What you want to be looking for, especially on like things like euro dollar when you come in, is where the orders are, where supply and demand orders are. Now, there's clearly orders, yeah? Just below, okay, and just above, if that makes sense. Also, I've just been indicated that there's options expiring on dollar CAD as well. We're going to go through that, but let's just do non-farm payrolls because it's live as well at the moment, yeah? Now, what you're looking for is when the news comes out, the price is going to get pushed up into higher or lower levels, yeah? Let's just make it a little bit clearer, yeah? Now, what you're going to find is these levels, let's just look at it on a 5-day, 15-minute just to get a little bit of an understanding, okay? Now, euro dollar's clearly been selling off since the back end for about 2 weeks. Now, that is fundamental, I think, personally. You can see that it's continuously coming down into these levels. Now, down in these levels, what do? We always looking to buy low, sell high. Make sense? Now, the only thing I would be a little bit wary of, yeah, is that fundamentally the market looks like the dollar's strong. Yeah, so do take that into account when you're looking at the figure as well. This is understanding the roadmap, understanding it from a little bit more of a backward view. Now, what you're looking for off the back of this news event, sometimes when the figure's not affected, it will stay in these type of ranges. Yeah, but what you'll tend to find is that sometimes when the move's a bit bigger, it will rally into higher or further levels. Make sense, guys? Now these entries are the best ones, and these where sometimes the news changes. Now it's coming up into the run up, so let's have a look. Always when I like to watch news, I like to watch the 5-minute time frame just to see, and I want to check it on a few pairs as well, just so I can see what's going on as well. Yeah, so look, dollar yen down here, I like that. I like down here on dollar yen. It's not bottom of the range, but it's near enough. I like up here. Do be cautious with your orders. I know I'm casually placing them, but don't place too many because sometimes they do get triggered. Don't put them in the middle ones here because those are the ones which get triggered and get invalidated. When the news comes out, don't forget, it doesn't respect technicals. It respects fundamentals. But if you've got a nice range, it's comfortable. Look at the range. There's an easy 80, 90 pip range there. Makes sense, guys? But what you're looking for is, for example, areas where the price could get pushed into. These are like a lot of these orders I've just placed in, for example. I doubt the price will get there, but if it does, I'll get a good entry. Coming back to euro dollar, let's just watch it as the news comes out. Yeah. So, for example, looking at it here, you got 3 minutes till the event comes out. Let's just bring it up. Perfect. So you can be looking at realistically on all feeds as well. So just so you guys are aware of it. It will come out quite effectively as well. All right, guys. We've got about 2 minutes in run up to the figure. Yeah. All right, the figure's going to come out. I'm going to switch it back to the charts. Yeah. Look, it looks like here. Figure's about to come out. I think it might come into these levels. Or into these levels. So this is crucial. Let's indicate. Let's watch what the figures. I've got the figure up on my other chart anyway, just so. Obviously, this is why it's handy to have a few screens. I've got the other chart up anyway, but I want you guys to see the price action off the thing. So let's have a look. At the moment, it's quite choppy. There's nothing really there. Figure's about to come out though. Is it out? All right, guys, I think it's about to come out. All right. I'm just checking it on the thing. I think you've got about 30 seconds. All right, 15 seconds. I think it's going to push down into these orders. So at the moment, it's indicating. Yep. Okay, look, the figures come out. The figures come out. We've got on the screen, it's 103. So 103 is weak dollar. Okay, that is heavily unexpected. You might see a big move. You might see a big move to the upside. I want to be buying that. That's a weak dollar, definitely. That's quite an unexpected figure, 103, considering to what it usually comes in. I think that's going to sentiment weak, a weak dollar. I think it's going to indicate weak dollar. That's my sentiment at the moment. Now, what you want to be watching is where it comes into these orders. Now, that's clearly indicated weak dollar. Now, what you're looking for, can you see? It will push into these orders or levels here. This is where we're looking for the entries, where off the back of the news, the move follows through. Now, to give you an understanding of obviously you can trade it through the news trading strategy, but I'm just giving you an understanding of the order flow as the news comes out. Now, 103 is heavily different to 193. That's why you've got this bigger move. Now, when you were watching it, guys, you saw it was quite clean. It did come down to find orders in there where when the news comes up, I think this is going to follow through quite strong. But do you remember, buy low, sell high? These are the entries where if you are holding entries from the low down here, the news pushes it in your favor. And this is what I want you guys to start understanding, start getting used to developing. Now, let's just look at the price and see what it's doing. Now, you can see we've had a weak dollar. Now, what we're looking for, I wouldn't want to be selling it here. It's too low. A little bit higher, I think, possibly. But you can see where you need to see. Obviously, we don't. What we're looking at, we have to trade the price. Yeah. Now, that is quite if you ask me, that's quite an unexpected figure. I didn't expect to see it. Now, you can see when the market's moving up, it's collecting orders as well. Now, there could be orders here. I think there's more likely to follow through because the figure's unexpected. So because it's 103 and the consensus was 193 and previous was 326, yeah, I think personally as a trader, in my experience watching the markets quite a few times, I think that's going to try and follow itself through. Now, the news trading strategy works as well, which you can guys trade but it doesn't work when the figure comes out unexpected. It's meant to be there when no, it works better, sorry, when the news comes out unexpected. You're waiting for the 5-minute candle to close, yeah, and then you go with the direction. And it's good range at the moment. So we're waiting for the candle to close. Now, this is one thing as well, yeah, that I need to see from you guys where is in regards to trade management and watching the charts. You need to let candlesticks close and give trades time to breathe. That's a crucial thing that is a must, because right now we're waiting to see how this candle closes to give us a little bit more of an idea about direction or which way it's going to go. Now, if you remember, I said I think the market will follow through because of the figure and the thing. That's just from experience. The more and more non-farm payrolls you guys watch, you will see it. But let's just see how it unfolds anyway. But you can see like it does have movements across the board. Yeah, guys, can you see that? It does move on all pairs. Obviously, I look at cable. Cable went up into a key sell zone there. Okay. Good range. So it's good range at the moment for the news trading strategy because I think you're going to get a follow through from where it is. Let's see how the candles end up closing. Yeah, but you can see you're getting movement. Can you see that? Euro pound markets push into key orders. So the reason why I'm showing you this is obviously somebody has to show it to you, then you start to trust it. When you start to trust the levels, trust the order flow, that's when you're going to start to be a lot more confident, if that makes sense. So now we're waiting for the 5-minute candle to close. So coming back to euro dollar, yeah. Okay, let's just see how it closes up. It looks like it's going to follow through. So, what you're looking to understand, myself personally, I think that's going to be following through. It looks very strong. I'd be wary. I wouldn't be selling that right now, guys. Yeah, I think you'll get a good move off the news trading strategy 1-to-1. Wait for the candle to close. Go with the direction. You're just looking for 10 or 15 pips. Yeah, but do be wary as well, though, guys. Don't trade it overly leveraged on the smaller accounts. Don't be doing 5 or 10 lots on 10K because sometimes it can be a little bit unforgiving. Yeah, but so let's just have a look. Euro dollar. Okay. That's it. That's where you would be taking the entry. Yeah. 3 pips above, and looking at it now, let's do some analysis. Now, if we're looking at it, it is towards the low of the screen. Yeah. Okay, guys. Now, I think personally, if it's going to sell off, it's probably going to invalidate these levels at the moment. Don't forget, sentiment's going to hold value. At the moment, the banks and the institutions are incorporating the figure. They're readjusting their balance sheets off the back of the economical data. They're looking at it, if that makes sense. So they will reevaluate where their positions go if they consider. That's why we're looking where the orders are. Yeah. I know it's a little bit quiet. Are you guys okay? You guys can hear me okay? Things like that?
Yeah, just calculating 3 pips, mate.
Okay, not to worry, not to worry. So, anyway, coming on now, because I know we've got some more economical data there. I know we are concentrating a lot on fundamentals, but it's crucial, especially if you want to be consistent in the markets long term. I'll leave the chart up there anyway, so we can watch it. But coming back onto the economical data, because I saw a few things about options expiry, stuff like that. Now, coming on to thing, it's broken down here. Dollar CAD options expiry in play during US non-farm payrolls and wage data. This is the major thing that's going on at the moment. So there's a large options expiry at 128.75. Now, I know a few weeks ago we had an euro dollar options expiry. Now, not all options expiries are as effective as other ones, but to give you an idea, obviously there's four major assets you can trade. You can trade spot FX is what we trade, equities, options, bond markets, for example's sake. Options, the reasons why they're really traded by institutions, if that makes sense. Now, Canadian dollar is heavily connected to do with oil. It's the largest commodity. It's their major thing. Now, sometimes what happens is if you're an institution or a big person with a large holding in something like oil or dollar, you will be watching CAD options expire because you hedge your risk through the options where you leave premiums. They're not nothing like binary options or anything like that. They're proper sophisticated options where you leave premiums either on stocks or FX futures, and then you buy the premiums away for according to how far the market moves away from your price. Personally, I think options they're very risk averse. They're not there for people that want to make money. I'm in the markets to make money. I live off the buzz of losing and winning, if that makes sense. And that's my thing though, if you're with me. So if you're somebody that's got a big holding like BP or something, you will employ guys to trade options to hedge against your risk. If that makes sense, especially when I'm not too sure if you guys saw in 2015, 2016, the oil price came down. It was heavily manipulated. It went down to nearly $20, $30 a barrel. There was a trade war going on with US and Russia. I don't know if you guys remember. Putin was at the front of it as usual, and they basically brought the price down, so it made it a very uncompetitive for Russian companies to sell oil because of the cost of exploration. To the cost to mine it was higher than the cost that they could sell it for. And I'm sure you guys saw when the sanctions and stuff were placed. I think oil itself, to give you guys a little bit of an interview, is very, very unforgiving. Dollar CAD moves in correlated to oil, but it's a little bit more forgiving. Oil is something which is traded by all day traders, but you need large accounts and you need to be very risk aware of that. In that sense, I mean, it can either make you or break you. And you need to be, when you move on to things like oil, gold, and pound yen and stuff like that, because those are the things that really move. A, you need bigger accounts, but B, you need good emotional control and psychology. If your psychology is not there or ready to be scaled up and you scale up too early, you'll have a disaster. Either you'll make money and give yourself a full sense of security, or you'll start drawing down. Makes sense. Now, coming back to that options expiry and the news thing, because I know I get taken off topic a little bit. We've got it coming out now at 2 o'clock, unemployment rate as well. Yeah. Now, all you guys need to be wary of is that this now, at the moment, as it stands, is weak dollar on the screen. Yeah. Now, it's clearly gone up and found orders. Can you see what I mean by the news comes out and it finds orders? Does that make sense? Now, you guys fundamentally are going to be trying to sit on it. It's not following through. I know the news trading strategy's taken an entry. Let's see how the candle closes in 1 minute. But I was expecting a little bit more follow through on that. There's clearly orders there. We need to watch that as well. But it should be following through. I'm not sure exactly. Is there anything else coming out? When's the next bit of news? Yeah. The next bit is in 2 o'clock, so in about not long, about hour and 20 minutes. Yeah. The only
When do we cancel this news trade, Neil? Sorry. How long is it valid for?
Cancel the news trade. You have to 15 minutes. If it's not valid after half an hour, 15. Watch 2 15-minute candles. If it's not valid after the second one, if it hasn't done what we said, cut it. Yeah.
Okay.
If it hasn't broken up by half an hour, so we've got another 5-minute candles. We'll be watching it anyway. We're here in the room anyway at the moment. Now, obviously, US markets are going to be opening up in half an hour as well. Yeah. Now, you've got two things that indicate of non-farm payrolls. One is you've got another bit of news coming out as well. We've got this other stuff coming out here, which I want to make you guys aware of. You've got Powell speaking, his speech. That is about 5:30. There's not really much trading going to be going on from Europe. We've got a Bank of Carney speaking as well. Yeah. Now, Carney doesn't usually speak on a Friday. Yeah. So something to be aware of. They are looking to probably do a possibility of another interest rate hike. I think that's the thing that everyone's are looking for. The orders are in the group. Paul tells me for the news trading strategy. Anyway, he's put them in there, so that gives you guys a bit more guidance on that. Now, coming back to non-farm payrolls. Yeah, so you guys can see that the figures come out and it pushes it into into orders. That's what I wanted to get you guys to look at, because sometimes what will happen is it will reverse the sentiment, guys. Yeah. Now, also the price will go down to collect orders as well. Yeah. Now that, for a non-farm payroll, to be transparent with you guys, for an unexpected figure, it's not really much of a move. 40 pips. If you had seen non-farm payrolls like 4 or 5 years ago, um, it used to move like 300-400 pips at a time. So I think personally, I think this is going to collect orders and go long, buying, sell, going high. I think personally, if you look at it, zooming out a little bit, I think it's collecting orders. I think the market's going to definitely try and follow through there. But we'll see how it pans out anyway. Now, coming back to, have any of you guys got any questions? I know everyone's a little bit quiet today. I know it's Friday. Have you guys got any questions, any queries? You guys there?
Yeah, we are. Do you considering placing a buy order in that unconfirmed area below, mate?
Perfect.
Sort of
down here, yeah?
1.22190. Yeah.
Yeah.
Down there, yeah, exactly.
Yeah. Buy order here. You do let the price tell you. Try not to get emotionally involved. Just try and say, I want it to go up or go down. That's one of the major retail things. It's something how I lost a hell of a lot of money, especially when I first started trading. Obviously, I was trading company funds, but I was also trading my own funds. And sometimes I used to let my ego come on the table quite a lot. Now, ego is crucial. Do not try and chase losses or put yourself, like I know I read in the disclaimer, do not trade money that you can't afford to lose. That's a crucial thing, because you make emotional decisions off the back of it. But also, like, to just play on psychology, because psychology is 60% of the game. I can give anybody the information. I've given this information to thousands and thousands of students. It's what you do with it and how you interpret it. But the emotional side of it is where most guys need the most amount of coaching, the most amount of training, because it's an emotional battle. It's like warfare. You're playing in the trenches, and you need to understand and be made familiar of the what's like. There's three parts to the trading cycle, if you ask myself. It's the entry, trade management, and what happens after the fact. Yeah. Now, the reason why the first three rules are there, sell high, buy low, that's crucial, because institutions do that. So generally, if you sell high and buy low, and you sit in the markets for long periods of time, that's when you're going to be more capable to, because obviously all I want to do is prepare you guys to sit in the markets for longer periods of time. So you can day trade for maybe 1,000, 2,000 days, because that's where the real money comes in. When you get more confident, sometimes when you're on new funds, you can be a little bit timid, or you can be checking around. You need to treat it as relaxation. You can't be stressed about it. I know some clients do. When you take losses, it is stressful. It can be a little bit stressful and put you off and stuff like that. You need to trade through that. If you trade, or if you fall in love with the result, either a big win or a big loss, you're falling in love with the result, not the process. If you keep going through the process, the results will show. You don't know mathematically where your winners and losers are going to be interpreted. As a trader, you could have 100 losing days in a row, but you also could have it on a flip side, where you could have 100 winning days in a row. Now, you just need to be able to manage your risk, so you do the same process regardless of whether you're winning and losing. losing, because if you stick to the process, the results will always eventually show up. There's just things that need to be tweaked. It's where you stop after matter of fact. One of the major things I see from new students, which I think puts a lot of guys off and puts me off as well, especially when I'm teaching, is the fact that they have a big loss or a big win and they get really excited, or they get put in a position where they have no they give themselves a full sense of security and then they're losing a lot of money, or you draw down straight away and it puts you on the back and you become tentative and a bit thing. As a trader, if you think you're going to make a hell of a lot of money out of the markets and not lose money as well, you're living in, it's a myth. You're living in la la land, especially where you're showing it on your own funds. That's the most emotional side of it. That's the side where you have to battle with your mind, but you have to battle with your mind with theory. A lot of the smarter guys have problems with psychology because they try to use logic to understand why they went wrong. You've got to understand the strategy only has 60% of 80 to 85% holds you up. Sometimes the market is going to be wrong, or sometimes you could do something emotionally where you could just lose, if that makes sense, or something. You could run into a string of days, 10, 20 days, 30 days. I lost £85,000 when I first started trading. I started with a small account, about 3.5k, and within 9 months I took it to about best part of 100k. I lost the whole account in 3 days. At that time, I thought I was going to eventually be able to, I think one of the orders has been triggered. I don't know on what, euro pound. Let's have a look. So there's a little order triggered there. Just give it a little stop. Is it euro dollar? Yeah, euro pound's just been triggered. Let's put a little stop on it. Let's see how that one goes as well. One thing a lot of guys see as well, where we're trading here, you can see it's very matter of fact. Yeah, it's more in a situation. If you're looking at this, yeah, fundamentally. Are you guys? Someone's put in the live room group saying technical difficulties. Is it all alright? Can you guys hear me okay or not? Hello? Technical difficulties.
Dropped out, mate, but you're back on. Yeah.
Oh, is it? Am I back on now or?
Yeah, you're back on now.
Perfect.
Yeah.
All right, I'm not too sure what happened. There might have been the internet connection. Is it back on, Paul? You good to go? Can you see me? Yep. Yeah, perfect. All right. That's sorry about that, guys. I'm not too sure. I think it was the internet. So look, you can see. I know some guys also get angry when it misses their order. Don't be angry to the fact that your order didn't get filled. If it gets filled, you get filled at the best possible price. If not, you don't. You shouldn't be emotional about the fact that you missed the order or you lost the order, because realistically, what you're doing then is you're putting yourself in a position where you're becoming emotional to the fact. Yeah. If you become emotional with the fact that you lost a position or the market ran in your favor once you closed the trade, a lot of the times, a lot of people, I heard one guy tell me that if I'd held the position for 4 days, the market would have reverted in my favor and I'd be on a profitable trade. That means your entry was in the wrong place, and that you are allowing yourself to be lucky. The third rule, which I've seen a few clients breaking as well. I've seen a client send me a P&L 2 days ago, which had a position which he was losing for 4 days. It wasn't that big of a range. It hadn't gone against him like 300-400 pips, but he was still holding it for 3 or 4 days. The third rule, and this is the things that I'm not seeing from you guys, especially from a lot of you guys, is the fact that when you start to take the entries, whether it be supply and demand, London opens a little bit different because the orders generally get executed. A lot of times you get taken out for break even or 1-to-1. Yeah, but when you start getting supply and demand entries, you want to start building up a backlog of entries where your stop losses are break even. Now, the reason why we teach you to get in off supply and demand is because it allows you to protect your account. It allows you to bring your stop loss down to break even, to at least find out for free whether you're right or wrong. Now, entry is 35% of the job. You need to know how to sell high and buy low, whether that be anything that you're trading. If you don't understand sell high and buy low, you'll never make money in the market. You'll be on the retail arm or the back end of the market, where you see the market running away and you think it's going up, so you buy here rather than selling, or you sell here rather than buying. Now, I hope you guys got a little bit more clarity on like non-farm payrolls and how the orders come out? I know Paul put the orders in the news trading strategy group, but I hope that gave you a little bit more clarity in being aware of the figure, how the news comes out. Was that a lot more helpful for you guys or not? What do you guys think? Be honest. Yeah? Hello? I think is it bad line?
I can hear you now, Neil.
All right, sorry.
You were
I'm having problems with the mic. Yeah, I'm having problems with the mic as well. I can't really hear you guys. I'm not too sure what's going on with the thing. I'm going to double check it, but is it good enough quality to continue? Because I can't hear you guys at all.
At the moment, it is, yeah.
Yeah, all right, perfect, guys.
Very backwards and forwards, mate. Yeah. So
yeah, I think it's internet connection. I can't put it down to anything else. I'm not too sure why the.
I'd say it's your internet connection, mate. Yeah.
Yeah, it's definitely internet connection. But what I'm going to do, okay, I'll continue for now anyway. Yeah, just so that the live room continues. If it gets too bad so you can't hear me, just let me know and we'll think. But I want you guys to see orders and how the news comes out and where the price pushes in. Obviously, we saw a figure of 103,000. That's quite unexpected to traditional, quite big. If it come 180, you would think. So you saw how the figure comes out as a weak dollar, and the price rallies up into orders. Let me just bring up euro dollar and collects orders here. This is the type of things that you need to be aware of. Now, what's happened when it's collected orders there, guys, is come back down and collected buy orders down here. Do understand the price is always a tug of war between buyers and sellers. Does that make sense? So this is what's going on at the moment. It's a tug of war between buyers and sellers. Sellers have clearly come in here. Buyers have clearly come in here. I'm not too sure if you guys got that entry, but it clearly would have allowed you to protect your stop loss at break even right now, guys. Can you see that? This is what I need you guys to start doing. You need to start repeating it. You need to start eat, sleep, and repeat. You need to get in, protect the trade. Now, what eventually will happen is you'll start to build a backlog of positions where you've got a few positions which do take you out for break for 10 or 12 pips. But soon, what you'll start to do is you have your stops at break even. And when your stops are at break even, what you're going to find quite quickly is the fact that when you hold them over a few sessions, that's how the market moves in your favor. Yeah. Now that's the process that you guys continuously have to go through. If you guys continuously take entries, you continuously give yourself more opportunities to grow the account. Because when you protect your account, the market's only going to move over a certain amount of positions. Now the reason why you don't hold a losing position is because every time you log into your trading account, if you're managing a position which is offside, it's stressful. Does that make sense or not? Yeah? Now, the figures clearly come out strong. Found sell orders come back down, and that's clearly found buy orders here. And this is the type of thing that I want you guys to be made aware of, because so many guys look at the price and they don't understand it. They can't work out the news. You can see it's a tug of war between buyers and sellers. Now, when I said earlier that it was probably going to be a strong dollar, I'm confident that it's found orders down here. Does that make sense? Now this is collecting orders. Remember when I was talking to you guys about supply and demand, order flows, support and resistance? This is a typical example of supply and demand working at its highest. Orders collected here, orders collected here, orders collected here. Now, no one's got a crystal ball. I can't guarantee you that it's going to come here. But there's probably a high probability. But also, you've got to be wary because you can collect, buy and sell orders here. That's why you need to be reactive about what the price does at certain levels, certain orders. You can't have a view and say, oh, it's going up or going down, because if the price goes into a buy or sell order, it's going to put yourself in a position where it collects orders. So yeah, right now, there's clearly more buyers in because it's going to be looking like it's going up. But what happens at these levels and these levels? Now that's the major thing I need you guys to start to implement. Don't hold in love with the position that euro dollar is going to go up or euro dollar is going to go down. Fall in love with the fact that where the orders are going and where the process is going. As long as you guys continuously do the orders or continuously get in of supply and demand, move your stop losses to break even, mathematically, what you'll find is 22% of the trades will run in your favor. So if you open 1,000 trades, 222 of them will run in your favor. Now, if you do consistently 10 to 20 trades a day, within 2 weeks, you should have a backlog of positions which grow the account. When you get 5 to 1, if you're risking 10 pips or 12 pips, you've got 30 or 40 pips on the trade. Just take the profits, because what that does, it concentrates on the growth of the account. So you do volume as well as get the rebate. That's the crucial model. That's what you need to understand. That's how we were programmed in the prop houses, to turn volume. When I used to do it in a prop house called Bull Moose Derivatives, I was given $1 a lot, and I used to do 200 to 300 lots a day on a 25k account. On $5, the earning potential was phenomenal. Yeah. Now, other second part of it is trade management. Now, trade management is 30% of the job. It can play with your emotions. You can start to do things off the matter of fact there. I heard one client say, I need to win. I need to make money. Listen, I'll level with you guys here about that. Nobody deserves anything from the market. The market is always the one that's right. Whether who you are, where you come from, it doesn't care. It's not objective or subjective to who you are. The market, the orders tell you where it's going. If you believe that you need something or you want something for the market, it will take all your money. It happened to me myself. Probably the last time I got hit heavily was Brexit. I was gunshot ho. I had everything on the line. I thought we were staying in before 2 weeks before the price was rallying up, and I got a no vote off the back of the Brexit decision, and I lost a hell of a lot of money because I brought my ego to the table. And that's what you guys need to remove, because when you want to day trade for like 2 years or 3 years or 5 years, once you guys, there's a preliminary stage. I'll give you the idea. After 12 months of doing it, not only 12 months of putting all your time into it or whatever, but once you start to get profitable, you'll never go back to doing anything else. Once you learn the skill in regards to the fact that there's certain things that you guys need to do to make this a cash generator rather than a burden. And those are what I'm programming you guys with. Sell high, buy low. That's inevitable. If you don't sell high and buy low, there's no, I don't want to know. We might as well not get along, because that's how retailers lose money. But you guys probably think, why does he always say it? I've seen so many clients continuously buy at the high and sell at the low and lose money, and then ask me why it doesn't work. But it's not because they don't follow the rules. It's not because you don't follow the rules. It's because you don't understand the basic principles of trading. The institutions do not buy at the low. They sell at the high and they buy at the low, because it's a matter of fact. It's a self-fulfilling prophecy. It's how it works. Does that make sense, guys? Now, you can see, obviously, the chart, the orders sorting themselves out in regards to the order flow is deciding which way it's going to be going out now at the moment. Now, there is other news coming out, yeah, which I want to just go through with you guys as well. Bear with me. So the Canadian news is out. Okay, bear with me. Is it out? Yeah, 1 minute. The internet's awful. Okay, bear with me. I'm not too sure. Can you guys hear me as well? What?
Yeah, mate. Whatever was going on is now stopped. Yeah. You need to buy more bandwidth, mate. Yeah. I can sell it to you. Yeah.
I like that. All right, perfect. No, yeah. Hasn't all come out. Bank of England thing is just something you guys want to be aware of and just new, because obviously if something comes out and he's like, oh, we're not looking to hike the rate, you could probably see a bigger effect on the pound. Now, a lot of people wait for non-farm payrolls, because what happens is after non-farm payrolls, it gives a clearer direction of which way the markets could be going. Now, looking at it here, if you're asking me, do you remember trade management? You need to allow the trade's time to breathe. Yeah, this is one of the major problems with newbies and people that get in the market. If the market hasn't done what you thought it was going to do within a 15 to 30 minute time frame, it's probably not going to have done it. If the price hasn't reversed within a 2 or 3 minute, 15-minute candles from here, it's probably not going to do it. Now, as a day trader, your key advantage or your key edge is the fact that you can cut positions, so you never hold a losing position overnight. So you never find out if the market's going to move against you for more than 12 hours. Now that is a skill of a trader. If you use leverage with that and you understand the risk, the profits are phenomenal. Now it's just about following the system and following the process. Now coming back to supply and demand and orders, what you guys want to be doing is taking as many entries as possible. Now a lot of the entries you're going to get knocked out for break even. Some of them are going to take you out for the 12-15 pip stop loss at the supply and demand level. However, some of them are going to do this thing. They're going to move in your favor and allow you to put your stop to break even. Now when you put your stop to break even, you want to be cancelling the trailing stops, because what you've done there is you found out that more probability that your entry probably has an what does it have orders behind it. Now you're not going to find that out until time goes on to see where the orders are, because it's a tug of war between buyers and sellers. You can see that prime example going on here now. Figures come out, weak dollar, it's come up into sellers, it's come down from the sellers, it clearly found sellers there because it came all the way into a buy zone. Now where it's found buyers, it's sorting itself out. That's what the market is, a tug of war. That's why you can never hold an opinion to the fact whether you think it's going to go long or short. All you can do is confirm from what the orders are telling you. Now for that fact, all you can do is keep selling high and buying low until you interimly catch the trend. Now there's two ways you can do it. Some guys that I know, a guy taught me something which I think is phenomenal. It's where you sell on the high and buy on the low. When the market breaks out, your order's in there anyway. But before you learn that, you guys have to know how to get in first of all at the sell at the high. I know 2 or 3 clients do practice it. I know the guy that done the most amount of volume last month buys and sells on the high and the low of each market. So when the market breaks, his orders are there. So he continuously builds a backlog of positions where his stops are at break even, at sells and high. He never takes profit. What he does is he waits for the market to move. If it's moved over a 2 or 3 day session, he takes it, because his main idea is to grow the account. When you guys trade for volume, you have to concentrate on growing the account, because if you don't grow your workhorse, then you're going to draw down and you're going to get in psychological losses. The major problem I see is guys take a few losses and then they start digging themselves a bigger hole, blaming something. One of the major things as well, there's one thing, to all clients, to everybody, don't think, just follow the process. I had a few clients the other day doing some coaching calls tell me they think, in their opinion, this, that. Don't think, follow the rules. The results will come from the back of it. If you guys think theory, this, that, you're confusing yourself. The rules are there for a reason. If you guys don't follow the rules and lose money and make money, if you follow the rules exactly how I give them to you, you will make money. People do it time and time again. What you do after the fact, whether you thought, oh, the market should have gone in your favor, you're owed it, that's irrelevant. I don't care about that, because if you come to me with that nonsense, everybody believes they want to make money. But are you going to put the hard work and the graft in to go and actually get the money? Are you going to take the ups and downs and swing? You can't win every single time as a trader, especially as it's like being a footballer and never getting an injury. So that will be something that you guys need to be made aware of. I've lost money, I've made money, but when you do this for a long time and you understand, when you get confident with the process, this becomes a cash generator. It doesn't become a burden. It can be a way for you to make a hell of a lot of money, and you don't have to be in control of no one. You're in complete control of it. The money's in your hand. You push the button, if that makes sense. And that's the main reason why I'm drawn to trading. That's why I look at trading the financial markets, because there's no restriction, there's no upside potential. There's no one telling me what to do. The only thing is you can lose money when you make wrong decisions. That's why you never bring your ego to the table. And that's why I want to start to get that out there. I want you guys to follow the process. Keep putting the orders in, keep taking supply and demand entries, keep getting your stop losses to break even. That's the process that you need to continue to go through. When you start to get lots and lots of orders where your stops are at break even, mathematically it will move in your favor. It happens to everybody. You have to go through those infant stages. After 2 or 3 years of doing it, it becomes like second nature. Sometimes you can foreguess the market, and that's where the big opportunities come. If we have a situation where Trump comes into power for the second term, we know where the market's going. That's when we go a little bit more, because it's going to move fundamentally. That's something that we're waiting for as well, guys, because at the moment, in the last 12 months, we haven't really had any big events. When we were working together at STX, we had Trump and we had Brexit back to back. I lost a hell of a lot of money off Brexit, but all the clients made money out of Brexit, and they made a hell of a lot of money off the back of Trump. The night Trump came into power, when Hillary got overturned, we came in the office and every client went was long, but a weak dollar, which was long equities basically, and people made a hell of a lot of money. The markets gave a 25% move. Obviously, as a trader, you need that movement as well. At the moment, if you look at it in a bit of a summary, just to give you guys a little bit more, I know not off topic, but it's always good to get you guys aware of it, especially guys that are new. You need to go through the process a few more times. If you've just done 100 or 200 trades, that's not enough trades for me to tell you guys if you're doing well enough or not. Once you give me 1,000 or 2,000 trades to audit from the result and the P&L, that's why it's so important for you guys to stick to risk management. I know some guys have no adhere to it, some guys stick to it, some guys do a hell of a lot of volume, blow the account, reload. You guys that want to start trading and holding balances and trade investor funds need to start adhering risk management on like a day-to-day scale, so you can show that you've sat in the markets for 90 days or 200 days and you've held your balance and you're showing profits out of the rebate as well as the growth of the account. Growing the account is all down to orders to break even, and then seeing if the market grows. If you do 100 trades in a week, 20 trades will grow the account. You just can't close them to see if they're going to close out, but you need to allow the market time to breathe. It's never going to turn in one 15-minute candle. It's been 45 minutes. Look at this. We're getting a bit of follow through now. I think it's clearly found buy orders. Can you guys see how I was interpreting it and breaking it down and showing you guys exactly how it works? Yeah. Now this probably is going to be rallying up into these type of orders. We have got other stuff coming out, so be wary of it as well. But that's giving you a little bit more of an idea of exactly what's going on with non-farm payrolls. Anyway, looking at euro pound. Like that's free money for me there. Realistically, I know I should be taking the profit on this because it is, but like £400 day to day, like to give you an understanding. Sometimes as a trader, you can just make decisions and take profits. Yeah, like £500 Friday afternoon, it's not that bad. This is the type of things you guys need to be concentrating on, growing accounts. It's not necessarily about just burning your vehicle out and trading away. You need to be selective. It's like being a sniper as well. Some of the best opportunities come from being concentrated. And if you're doing 5 or 10 lots on 2 or 1, 2 trades a day, it's still good income. Obviously, myself, when we go through a few live room sessions and you guys are really doing what you said, following London holding, I'm going to show you some live one-to-one sessions where we just trade all day, where it's completely different. It's pushing the button. It's massacre on the account. But you need to know what you're doing, because sometimes when you trade, it's building positions. So you buy and sell to aggregate positions like the banks do. But you need to be careful, because you can blow accounts, but you can make a hell of a lot of money as well. But a lot of the volume turners buy and sell on the high. That's what they do, for example's sake. But it's more about showing you guys that it can be done, and giving you guys that bit more confidence and transparency to showing you that. But just to come back, I'm going to wrap it up now anyway. The quality is not that great either. So have you guys got any questions or any queries or anything like that? Has that session helped you guys in regards to showing you what the price does? Let's just look at what the price is doing as well, just to see a little bit more confident. I think personally that's going to be following through into these levels to find orders. If we get a second touch of the buy, don't forget, remember guys, it's been selling off fundamentally. So if fundamentally you want to be taking some of these supply entries, because it gives you more probability that it's going to continue to go down. But don't have a biased view in the market. Never think that it's going to go up or it's going to go down. If you have that biased view, that's where you bring your ego to the table. And it happens time and time again. It especially happens when guys lose money. They get a bit egoistic, or they put themselves in a position where they get a little bit confident or thing. You guys need to just continue doing the process. And like the beauty of this thing is, on like 10 or 20K, you can make a hell of a lot of money. Guy, I see we had one client rebate nearly the best part of 2,000 lots last month. So people can do it, and his account size is under 20K. It's just about mindset and obviously preparing yourself. But first of all, I need to get you guys getting in and getting out and protecting the accounts, and at least taking some confidence in it. You should be treating trading as mindset. You should be calm, you should be confident, you shouldn't be looking at the screen, you shouldn't be making yourself unaware. If you're stressed and stuff like that, you're going to make impatient decisions, and you need to think logically. Some of the smarter guys do struggle sometimes, where they come up with logic in their head or reasoning about why. It's not. The reason why you lost is because the orders, you didn't understand where the orders were. You didn't understand where the buyers and sellers were. Now you can see I didn't have a biased view on non-farm payrolls. I didn't think where it was going. I was just allowing the orders to tell me where it's going to go. Now that for a non-farm payrolls, 40 pips coming up, just wrapping it up really, it's not really that big of a move. Non-farm payrolls used to move 200-300 pips in like 30 seconds, and markets were thing. That's what I was talking about when I was telling you guys that market conditions at the moment, economical data is not really doing anything dramatically, if that makes sense. I think now it's really getting driven by Trump, fundamentals, Russia. I think there's going to be some big developments in the next 3 to 6 months. I think these are going to be good market conditions for the next 3 months. Technically, markets are going to move, maybe not so aggressively, but they're going to respect technicals quite well until we get a big fundamental event, which would either be Trump's second term, Brexit. I don't really see a world war. I personally don't see a world war or whatever they're saying. I know there's some stuff going on with Russia and the spies and stuff like that, but I don't see that kicking off. I think that's just all a hoax or a smoke screen. There's something going on beyond the screens, the same way they feed the media with things that sometimes can make you think about stuff that's not necessary, and they're playing puppet strings behind the back. But anyway, all right, guys, I'm going to wrap it up for today. Yeah. Any questions, any queries, anything like that, guys? All right, I'm getting no response back. I think the market's going to continue to follow through. Be wary of where the orders are, guys. Happy trading. We will be putting the video up on YouTube. Happy trading. Happy Friday, guys. And we'll see you guys next week. And we'll see where we go from there. All right, guys. Fantastic. Bye.